Hey everyone, it's Alan Brochstein from New Cannabis Ventures and 420 Investor, trying to bring you up to speed with the most important cannabis news from last week. This video tries to add a little context to these most important news stories that we publish at New Cannabis Ventures. We've been putting out our newsletter on Sunday mornings since late 2015. If you'd like to receive this in your inbox, in the description of this video, there's a link to sign up to get it. Otherwise, we do publish it at 11 Eastern. I think that's right. Maybe it's 10 Eastern. I forget. Probably, I don't remember. 11 Eastern. So you can just find it on our site. So this is another very tough week. I've been talking the last several weeks about how maybe the MSOs had found a bottom. There was certainly some good evidence of that. But as I was telling my subscribers at 420 Investor all week, it looked like that was a no-go. And indeed, on Friday, it became very clear as those stocks, many of them broke to new lows, including the ETF MSOS. So tough market. I keep listening to people talk about this disconnect between the fundamentals and valuation and the price action that's been going on for 8 months. It's very frustrating, but when's it going to end is a very good question. And like I said, I was hopeful that at least for the MSOs, that might have already happened. And hey, maybe it did on Friday. We'll have to see. But right now, it's looking like, unfortunately, more of the same as we head into earnings season in just a few weeks. So with that, we had a lot of news this week. Not so much the number of stories, but rather the significance of them. And the most important news items on the curated press release side, again, we run press releases that are significant. They're fall into 3 categories: capital raises, financial reporting, and M&A. And I'll start with M&A because this was a big week for M&A in 3 very different deals. I'm going to start with the first one that comes to mind is a big merger out of Colorado, or in Colorado, I should say. PharmaCann, which we interviewed recently at 420 Investor. And this is the company, a private MSO that is based in Chicago, like several other publicly traded MSOs. And they recently sold a 10.5% stake via a contingent option, or an option to Kronos Group. So that's PharmaCann, if you're not familiar with them. And they didn't disclose the terms. And generally at New Cannabis Ventures, if you don't say how big your deal is, we don't publish it. But in this case, we made an exception because I know it's big. LivWell is one of the largest operators in Colorado, very retail-oriented, run by John Lord from, I believe, New Zealand. If I'm wrong, it's Australia, but I think he's from New Zealand. And he's been long trying to go public, and so most of the company is their Colorado operations. They also have at least one store, I think, licensed in Michigan. So we don't know the size of that deal. But what makes it interesting is PharmaCann's on its way to going public, and if you've followed the company, you know that they were going to merge with MedMen years ago, and they have some common shareholders. And so, it looked like it was a challenged story financially. They published their financials a few years ago. It was via Innovative Industrial Properties, put out their financials a while ago. So it'll be interesting to see now with the combined LivWell what it looks like. So that was one big deal. Also out of Colorado, Wana Edibles. And we just interviewed Nancy Whiteman recently. This is a really good company on a lot of different levels. I don't have a lot of financial information about them, and there was no financial information released in the press release. But several weeks ago, we talked about how some brands are emerging in the United States, and we were citing some data from BDSA. And in fact, one of the companies we mentioned at the time was Wana. And Wana operates in Colorado, and that's where a lot of their sales come from. They have their own operations there. But they also license their brand in many different states, as well as to Indiva in Canada. So the news story this week, Canopy Growth paid or will pay $297.5 million, and that gives them the right in the future to buy the rest of to buy the company at 15% of its fair market value at the time. So they'll have to pay more. They can pay in cash or in stock, but in this case, they're paying cash for this option, which may or may not take place. As you probably know, right now Canopy Growth can't buy Wana because they would lose their NASDAQ stock listing. That's really in their TSX listing. That's really the issue. So a lot of people think that this would only come into effect if we were to have legalization, but there are actually other paths. Essentially, as long as they can keep their listing, then they could go ahead and acquire Wana. So I thought it was really interesting. This is I'll talk more about this in just a moment, but that was acquisition number 2. And now I got to remember acquisition number 3. Oh yeah, so this one's very common from what we've been seeing, but still significant. Cresco is paying $80 million. Didn't reveal the financials, but the reality is what they're buying, which is a clinical research registrant in Pennsylvania, is a startup. So they're picking up 3 dispensaries that I don't even know if they're open yet, but really what they're picking up is additional manufacturing and cultivation capacity. So, Pennsylvania is a very strong market. Cresco has been one of the leading players there. We've seen a lot of M&A in that space, whether it's to buy additional dispensaries. The True Leaf Harvest deal, they didn't have to dispose of any assets, and now Cresco is bulking up to keep its capacity in line with that market. So those are the 3 M&A articles. The other thing that we cover, as I mentioned, is financials. The only company that reported this week was Valens. It was a slight disappointment. They missed. Well, I say slight. They missed the estimates. They reported 16% year-over-year growth, but that was mainly through acquisition. So that stock was punished pretty badly. And then the other type of news we release that we run is, M&A we covered, financials we covered, capital raises. And so I was really excited about this one, and I think it makes me think a lot about what's going on in our industry, and to juxtapose that against my introductory comments about how we continue to see weak price action but solid fundamentals. I think this really reinforces that point, and that is this company Dutchy. They just raised money earlier this year, and then they at the same time announced some acquisitions. Dutchy enables e-commerce for cannabis companies, and we know that's been a big part of the story as people have shifted. Still today, most business is done in the store, but it's increasingly moving towards either delivery or curbside pickup. And so Dutchy raised, I think it was $350 million at a $3.7 billion valuation. Wow. So it's a private company, technology. I'm unaware of any other cannabis technology company valued at this. You can read the press release to find out some of their metrics. They don't release their own revenue or earnings, but they do release gross merchandise value. I think they said 14 billion. So they're getting a percentage of that. So what's interesting is these are household technology funds that are investing in this company. And why are they investing in Dutchy if the cannabis industry is as horrible as these stock charts look now? Rhetorical question. So that was the curated news that we ran. And then we also have proprietary content. We were a little bit light this week. We generally run 2 interviews. We ran just 1. We would have run a separate, in our newsletter, we would have included the GrowGen pre-announcement, but we interviewed GrowGen. Lucky us, it just happened to be very well timed. So we were actually able to try to find out what the heck happened. Why is the same store sales down so much? It dropped from 60% in Q2 to just 15% in Q3. Um, the company also walked away from a very large, mainly cash-based acquisition in Michigan, and we talked about that on the interview as well. So, if you care more about that, I suggest you read the interview. We've interviewed GrowGen several times. I've been following that company since day one when they went public. So that was one piece of proprietary content that we ran, and then the final one is Michigan. And as I mentioned in the past, I spend some time when there's public data available, updating our readers about what's going on in those markets. And in the case of Michigan, like a lot of new adult use programs, medical gets eroded. So we continue to see pretty large declines year over year in medical, which is a much smaller part of their overall market, but the adult use continues to grow at very strong pace, over 100%, I believe. And in any event, that market is one of the very largest markets, and it's not that penetrated by MSOs. The only MSOs off the top of my mind that really have a meaningful position there are Cresco and Red, White, and Bloom. And then, of course, Terrason's acquiring Gage, which is a single state operator there. There are a lot of other operators that are private. Some of them are pretty interesting. Anyway, that was the last of the content we ran. So finally, each newsletter I try to include, it's really the only editorial content that we run on our site. Every Sunday, been doing it, like I said, since the end of 2015. And this week, I took a look at this Canopy Wana deal and put it in context with what Tilray did with MedMen and Kronos with PharmaCann and Scott's Miracle-Gro with RIV Capital, and spent some time talking about whether or not this makes sense or not. And I'll let you read it and draw your own conclusions. But I think the main takeaway, if I were a cannabis investor, is take a look at the balance sheets of Tilray and Canopy and see how much they've deteriorated already, and then try to factor in what's going to happen as we get closer and closer to debt maturities, as EBITDA continues to be low or negative, and as these companies continue along this path of lining up U.S. assets that deliver zero return in the short term. So I'll just leave it at that. So I hope this is a better week for us as cannabis investors, and take it easy.